over to the trade on these names, talk more about that with Chris Murphy. He is co-head of derivative strategy at Susquehanna. And Chris, maybe you can give us a little bit of a window into kind of what direction I was going with Boris there. But is this largely a retail-driven movement as it was in the past and as we perceive it, or is it hedge funds more involved this time around?
Hey, Kelly, thanks. No, it's clearly a mix, just based on the size of some of the blocks that we're seeing trading in some of these names. When we're seeing 5 options at a time, 1 option at a time, we think that's more likely retail. When we're seeing 2,500, 5,000 block of calls trading at the same time, we're pretty confident that it's a combination.
Yeah, and what would you say is similar and different this time around from maybe the episodes we've seen in the past couple of years?
I don't think it's nearly like what we saw in 2021. And I think part of the reason why is a lot of the short side of these trades, they still remember 2021. They learned their lesson. They have some things in place. They're not quite as aggressively short as you remember some of those hedge funds that were the first time around. I think it's certainly interesting on a day when the S&P is not moving at all. And you think if you weren't looking at this sector, it'd be one of the most boring days of the year as we wait for CPI. So there's some interesting things going on. I don't think it's going to be as big as 2021.
Boris hinted that maybe the fundamentals are the reason why these stocks are taking off, that people get wind of job postings and employee sentiment turning more positive and think that there's a business and ultimately a stock case to be made for that. But your data and some of the others seem to point more towards this kind of short squeeze. GME, 24% short interest, AMC, 21%. Numbers, some of them are lower, but some of them are also still pretty high. So how would you kind of rack the relative importance of a good fundamental story, even if it's one being whispered about, high short interest, which seems to be the most important lever being pulled here?
It's a short-term, short squeeze type of a trade for the most part. It's certainly great if a company has great fundamentals and they can point towards that. But these trades are happening intraday, so they're not long-term investments. It's and as this trade's starting to move from GameStop and AMC into other names, the momentum chasers who are doing this trade are looking at what's the next highly shorted name that we can look towards. So. Right. That's all really short term. I mean, the names that this is happening to that have strong fundamentals, there are good trades to be made in the options, but it's not buying short term calls.
Okay, so finally, you do think you can identify some of the next candidates maybe for where this wave could be headed. What examples would you give?
Well, I mean, we're just going to follow spikes in call volume, spikes in volatility. Fuel cell, Tupperware, SPCE. Saw a pretty interesting call buyer in Roku. That's more of a mainstream name, but 5,095 calls were bought today. That has a decent short interest there as well. So, we're looking for upticks in volume and volatility like everybody else, but just as importantly, looking for downticks in volatility as a sign that, okay, the momentum chasing trade is leaving these stocks. Because we're seeing volatility, implied volatility levels start to move lower, where is it going to go next? So there's 2 parts to that.
Fascinating. Chris, just before we kind of pivot, talk markets, where are you on the markets more broadly? Are we just waiting on the CPI at this point?
Yeah, I think so. I mean, we're waiting for a little bit more of an all clear that this uptick in inflation that we've seen recently was temporary. In terms of the broader market, I know people are asking, how can you buy it at, we're back to all-time highs, things like that. I would point out we're always focusing on the options. If you're looking at macro options like S&P 500 options, they're very inexpensive. If I had to pick a direction for the next 6 months, I still would think the market's going higher. But what's great about a low volatility environment is you can have some protection on it. If you're not 100% confident about buying the S&P, you don't want to be the last one to buy it at all-time highs. You can have some protection on for about as cheap as we've seen it in a while. So that's what I would recommend.
Yeah, market might be the only place insurance is relatively cheap these days. Chris, thanks so much for joining us. Appreciate it.